Dear ladies and gentlemen, happy to welcome you at the Digital Innovation Pavilion. We had so many great sessions over this week, and I assume we're all a bit tired, exhausted from all of these great conversations and meetings we had, for sure. But today we're bringing you another very interesting session, which really combines financial innovation, digital technologies, and green finance. And we have amazing speakers that are going to be with us today. So we have Sean Piggy, a legendary person for climate finance, the creator of the Climate Bonds Initiative and the Climate Bond Standard, which is the most important and the strictest green bond standard out there. We have Bruce Keith, who used to be with IFC and recently joined a very ambitious asset manager, Regia Capital, as a partner, focused on sustainability, and also keen at using digital technologies, and we'll be happy to learn more about that. We have Arend Kaunka, and he's with Nature Finance, doing wonderful green bond innovations out there. And of course, last but not the least, we have Garrett Snyderman, who's leading the Green Digital Finance Alliance, the organization that makes a huge focus on bringing digital innovations into the green finance space. And we'll start with Garrett because recently, a few months ago, at the Building Bridges Conference, Garrett and the team presented an interesting report that actually highlights all the innovative use cases that were being done in the green bond space for the recent year, I guess, or maybe even a couple of years. And just before we give the word to Garrett, I can just remind ourselves that we've been working on digitizing green bonds for a number of years. This has been every year the topic of the Digital Innovation Pavilion. We've seen great examples. But what has changed now, we're seeing that the industry is moving and there are more bonds being digitized, and we're very happy to learn about that from Garrett. So
thanks a lot, and
you're welcome to start, and we're putting your presentation.
Thanks a lot, and hi everyone, also from Zurich in Switzerland. I would really love to be there with you, although it looks like it's quite hot where you are, slightly more on the opposite here in Zurich. But yes, just of course, like given the fellow panelists, I'm probably not sharing too advanced stuff here, but at least to kickstart the conversation, would love to share. And just Alexei, so you have your presentation on, and so I give you the signal when to change the slides. Am I right? Or is this mine?
We're seeing your presentation now.
Okay, good. Okay, so it's mine. Okay, good. I wasn't fully sure. Okay, so yes, just a very quick recap. I mean, Alexei has already mentioned it. GDFA is a Swiss nonprofit foundation, a think and do tank. And we are typically convening experts from around the globe to create transformative solutions that are usually at the intersection of tech, finance, and climate and nature. And when we started looking at what happens in the, oops, I'm somehow seeing slightly different. Okay. When we started looking at what's happening in the climate finance space currently and over the last few years, then we have seen on the one side that there's of course this like often quoted $1 trillion climate finance gap that everyone knows meanwhile about. There is also an increasing scrutiny when it comes to integrity, and I mean Climate Bonds Initiative had already also stated that in their communication, there is on the other side the issuers for whom often the issuance of green bonds or other labeled bonds is quite expensive, and therefore also a lot of issuers are shying away from it, and especially when it then comes to the long tail and the smaller issuers, it's often a cost and also complexity that they cannot afford. And on the other side, what we're also seeing in the financial markets is, of course, the continuation of the digitalization trend. And digitalization is, of course, has been for a long time a buzzword. And of course, any trading system is already, meanwhile, oops, shouldn't move. Not sure why it's moving. Can you? I can actually not move back for some reason. Let me just stop the sharing because on my slide it's not moving here.
We see it moving fine. Go good.
Yeah, I know, but it shouldn't have moved yet. That's why it's a bit irritating here. Let me just.
We can share the slides from its laptop.
Let me just.
Slides from your laptop there. You can share the slides from your laptop.
Yes. So I think now it's matching again. Okay. So yeah. So the last stage or the current stage where we see also innovation happening on the digitalization side is in the so-called tokenization of assets. So meaning there's more and more banks, stock exchanges piloting around the globe with tokenization of assets, with the use of blockchain and smart contracts, and taking all this together, we saw that there's like an emerging opportunity that we should all collaborate on. And I'm not. Oh, okay. Yeah. So, and what we have then also seen, and here just simplifying it, of course, where there have been already like different stages of the bond markets, and they have of course already been almost 1,000 years old when it started in Venice, and since then there have been a lot of variations of bonds emerged, and of course here in our context the labeled bonds, which added ESG criteria to the pure credit instrument, were emerging and have also seen quite a boom over the last few years. And in parallel, there have been also different pilots happening that were focused more on digital bonds, where it was often more a play about increasing efficiency and more streamlining the issuance process and the whole life cycle of a bond. And we are seeing at the same time also a maturing of the technologies that are helping actually to validate impact that is happening, whether that's on energy infrastructure, where you can measure the energy savings or energy production, whether it's on nature, where satellite images are helping to monitor the progress of afforestation, for instance. And taking all these together, you will arrive at what's currently or is still at an early stage. We call it digital impact bonds, but also I will explain in a minute the difference from the markets. Currently, it's probably more called digital green bonds. However, we have also seen that with an increased emphasis on the impact that shall be generated, there's a good reason to actually change the naming. And for some reason, it's not changing here. Okay, good. There's probably a small time delay. And so we have recently also, with collaboration of some of the people present in the room, Alexei, Arndt has also looked at it. We have been working on a discussion paper that is actually has the same name as the event that you're currently participating in. And what we call digital impact bonds, just to briefly summarize, is actually digitally issued and administrated labeled bonds. And here specifically with the integration of real-time, or at least near real-time measured impact data. So meaning that while the financial instrument is built on a smart contract, you will find here opportunities to increase the impact integrity and also transparency, and thereby, of course, also open up opportunities to significantly simplify the effort needed for the disclosures and reporting on these kind of instruments. And so therefore, the emphasis here is on the impact side, and the slides are for some reason changing. Yeah. So key findings from the discussion paper were on the one side that the digitalization has been meanwhile quite extensively piloted. Also, that pilots around the globe from Switzerland to Asia and of course also in the US have already reconfirmed that there's a significant efficiency potential. The scalability is still somewhat of a challenge because of fragmented regulation between the jurisdictions. Liquidity is, of course, therefore even more still fragmented, and also due to the experimental stage of a lot of these initiatives, the liquidity is, of course, also still limited. And also in all these early trials with these digital impact bonds, the actual integration of real-time impact data is also somewhat limited. However, that said, there was also clearly recognition of three frontiers in which opportunities arise. The efficiency is really lower costs, and I mean the early estimates have been in the 50% plus for the issuance process. There's also opportunities in ensuring the interoperability, and I think Sean and Climate Bonds Initiative had also in their current I'm trying to switch back. In their current newsletter, had also hinted at the the principles for taxonomy interoperability. So there is definitely some work happening that is already pointing in the right direction. Recommendations here to just quickly go through because the slides will change quickly. Then there's need for more standardization and harmonization. We also recommend to use really all the standard initiatives and frameworks that are already developed by all the established parties in the market. There's also still, when it comes to these technology-enabled bonds, a capacity building needed, especially for the global south and also smaller issuers to make full use of these emerging opportunities. The actual rollout of MRV technologies, so measurement, reporting, verification, the satellite imagery and similar, still also requires some thinking and some solutions for funding it properly to not overburden impact financing with the cost of the measurement. Also, pilots that have already happened need to be extended, and especially to also look at new use cases, new impact use cases that could still be proven and therefore also establish more trust. And of course, collaboration can always be improved. And here we definitely see that the collaboration between the already quite mature green finance community and the conventional capital markets and the digital innovation community needs to be further advanced. Yeah, so just closing it also already with a call to collaboration. We believe that through the application of digital technologies, we can further work towards scalable climate finance. But in the end, we also still believe that technology is not necessarily the ultimate hurdle. The solutions are available, but therefore it's even more critical to now really focus on the collaboration between the different market players to look more for interoperability. I think here the ambition is not to create one single system to rule them all, but at least to find alignment and integration with each other. And so therefore, we are really calling here for all the stakeholders in the market, whether they be issuers, investors, standard setters, and other initiatives to collaborate on this, and looking forward to our panel discussion and trying now to switch off the sharing.
Thank you so much, Garrett. It's been a very interesting overview of the recent trends in the green bond digitalization markets, and congratulations on the great work that GDFA is doing in convening the crowd and advocating for this very much needed technology in the green bond space. So I've seen the presentation of building bridges. It was amazing and super insightful. And I think it's a great setting of the stage for our today's discussion and welcoming back our today's speakers. So I think Garrett really made all my work today. I don't have to come up with my own topics for the discussion. I think the slide with recommendations was really providing a holistic picture. And so maybe we can start with standard. So, we're talking about digital bonds. We are obviously talking about using the blockchain technology to issue them, to store the data. But we also know that there are many blockchains. So we have Hedera who's supporting us at this pavilion, but we also know that Switzerland have their own favorite blockchain. There's Ethereum, there's other blockchains out there. And there's a clear leader. So in this situation, when banks and when issuers are trying to use blockchain to issue green bonds, it creates some sort of a scrutiny, and it doesn't really help with interoperability. It's like working, the silos. This country is using this chain, this country is using the other chain. I know that ICMA, International Capital Markets Association, they created some sort of a digital taxonomy working group. And if anyone who is aware, maybe you can highlight their work. But maybe starting with Sean, you made tremendous job in providing the most holistic, rigorous standard for the green bond market. So you already, you opened up green bond for the entire world, right? And now we're seeing that there's a new technology that is set to somehow improve green bond performance, transparency, and other things that Garrett has highlighted. So what are your thoughts, maybe first of all, on the impact of this technology, whether you agree with what Garrett has said or not, and maybe you can share on the standardization side. So there are so many blockchains and standards. How can we bring them together?
No idea. And Garrett, I kind of don't care. I'm going to say nice, it's great. And the plumbing of the system is really important to approve of. In a sense, that in any large-scale market, stuff that reduces friction and reduces costs is positive and important. So your contribution would seem to be useful to reducing cost and reducing friction. And that'll increase restrictions, allow more people to participate in the market. But is it the most urgent problem facing green bonds? Absolutely not. It's an engineering problem as it grows. As the market grows, it'll suck in solutions like this. I'm not sure about the blockchains coming together. I'm going to leave that to other parties to work out. It's not part of our work stream. We're not involved in it. We don't see it as a priority. And standards, we don't see the communications of standard, which is what blockchain technology is fundamentally about, as being an issue. Sure, there are some monitoring technologies, more sensor technologies, and communication technologies that are useful. There is much more the commissioning by the issuers of the kinds of post-issuance support, that is the paper, rather than the jet communication material that are into your issuers. But, as I said, anything that contributes to cost reduction and friction reduction is useful. I mean, when I saw the topic of digital impact bonds, I'm afraid I went to 3 other areas that I think are more important for the digital sector. I would rather people would focus on the whole issue of inclusive economies, like Brazil has. Here we have the PIX system, which is absolutely superb. The private sector failed to respond to the central bank's request to have a unified digital payment system. They did it themselves in 2021. And now, if you are at a cafe by the street and you want to pay the young girl who's selling handkerchiefs to raise money for family money, she has a number around her neck. You type in a number, you get a zero cost payment into her zero cost bank account. Now that is digital impact. That is inclusion. And that's where I want solutions to appear. I want Pix to go global, and I want to kill MasterCard and Visa card with their last cost. So maybe there's an angle there, but I also want to look at the extent to which digital innovations can speed up real economy. As you can see, a lot of talk about AI, some of it's much simpler than AI at the moment. Industrial efficiency, building design, air conditioning efficiency for Christ's sake. It is so bad. It doesn't need to be. With clever technology, we can make it much more efficient. Predictive capacity, and much more infinite, and the extent to which it can predict what weather prices can become crazy in the future, than transmitting information about weather, if you see what I mean. I'm concerned about green AI data centers. I'm concerned about blockchain energy use and Bitcoin mining energy use. And now I'm really concerned about green data centers. Although I think we can make it into a buyer's drive for renewable energy, which will drive down the cost of renewable energy. We have to look at that discussion, and that's what I'm thinking. And I'm also concerned about the extent to which we can use digital impact to deflate conflict, to deflate famine, to deflate disease impact, and so on. These are the issues that actually count. Because we're going into a world of intense crisis, one after the other. A lot of people are going to die at a death scenario. We can reduce that if we apply our digital thinking on how we manage the world really quickly. Cost reduction in the bond market is useful, but frankly, a tiny problem to try and solve. So I don't want to stop there. I just want to say, I'm going to say great and see how it goes. It's a plumbing issue. We've got to work on the plumbing issues. But I also want the great minds we have, the Garrett's and the Alexi, to look at some bigger issues. Because there are some hell of a shitty set of problems coming our way.
Thank you so much, Sean. It's a fascinating comment and sharing your thoughts and insights. And to speak to that, you guys were not here this Wednesday, and we were presenting the first sovereign Uganda carbon platform, which is based on our technology that gave away to Uganda to increase inclusion and to help empower the local players in the market within a unified digital process that the government oversees, which is an analog of PIX, but in the carbon world. And we are thinking with our Ugandan colleagues to increase the scope of their platform, which is not ours anymore, to the green bonds in the future. We'll be love to talk to you and see what are the issues that we can address. And it focusing as well on inclusion and additional data. And Uganda has lots of talented people who are providing a solution that needs to be integrated. But you need some backbone, some rail. And I agree with you that the government is not doing this, the industry will do it. So maybe we can then go to Bruce, and if you can share with us some of the thoughts, how you would use technology for the operations of your fund, and how you see technologies applied to the green market. We have some conversations around that, and I would appreciate if we have an active discussion.
Right, thank you. And yeah, I'm going to actually work backwards on that. And you just said in what we had the presentation today, and I'll see it about it. Because in the end, it's not the capital market instrument. It's not what's already existing. Green bonds are everywhere. One of the biggest interests last year were green bonds. Those are the instruments. So you take for plumbing. And then how it goes down to the smallest common denominator. The money, or the recipients, or the beneficiaries. And how do you track that? So you mentioned about plumbing, you mentioned about tracking it. And technologies are platforms to do that. They're tools. They aren't the answer, they're not the end game, they're tools for you. So when I was at IFC, when we created the first sort of plumbing fund, it ran purely on digital rails and blockchain. And it was meant to leverage what the World Bank had created, the climate warehouse node that had trust on tracking carbon credits, but all the way down to the full benefits that were paid, not just looking at legacy. But what we discovered there is you can drill down to that point. The company that is the blockchain system was required to make it an open system and interoperable. if anybody else is going to plug into the Climate Warehouse, with any digital platform over the chain would be able to, and the developer was required to help that if they needed. That's how you work forward. So with the IT we were doing it, we looked at a digital bond. It can be a carbon bond. That's too far to take. It's a digital green bond, led by Hedera and some others. About how do you take that and down to the most level? Run it on those rails. What was hugely appealing was the absolute transparency and accountability. The plumbing behind it, the best usage and how you track it. And so if we look back with the blockchain, it doesn't matter who built it, it's the open, but more what is the ethic of the people behind it and their purpose. And you can't just put out a big blockchain system. Everyone should have the right ethic, the right purpose. We did it, I see now we're trying to go eventually when we get to it and create it. The who's behind it, and it has to be interoperable, it has to be accessible. It's collaboration. And one of the biggest points in this presentation, you have to collaborate across stakeholders. The regulators are going to be involved, it's a bond. The banks are going to be involved, it's a bond. It's whatever the different players have to look at. Some of the capital market. If you make it digital, you can add in other players, but also you can bring in the retail. It's not just through the small and medium beneficiaries, through the small and medium investors who want to play in this. Massive amounts of money. So how do you move that and make it accessible? And you say, it's in the efficiency and interoperability is the integrity behind it. So that you're using a high integrity carbon credit to make it with a high integrity system for managing it. So go back to direct integration of the MRV, but all the other data layers and the forward's available. And therefore verifiable. So then these are tools that you on the rails in. It's not the only answer, but as these improve, as the standards change, as countries start integrating their systems, it already plays into it. It's got to be different. Looking at where it's coming from, there's a whole lot more coming that we don't know, so you can't block it out now. And it's in it, when we look at these, we're looking, license happiness, every investment in the world runs off of large digital properties, whether it's the research or their analysis of that, or their work on the investments in their underwriting. We wouldn't bring that where we have and layering blockchain and digital rails, but then we can track the full use of proceeds down to the last dollar and the full delivery of benefits. I would call it the impact statement. So I know where my money is going, I know where the bond money is going down the but I know exactly the impact on the back. The measuring systems and the source system. You link them together. So you go up and down the rail from both of them. What we want to try to do in the capital markets is the private sector need to build these in at high capacity and high volume to have that integrity and have openness. But as we invest in other areas, this information is available and leveraged. It's to my benefit, but it's to the benefit of the market community. If you get to that point, then I know that Brazil, not just in Brazil, also created the CRAs. These are receivables and agricultural payments and products going down to the smallest family farm owner. I can track to a family farm of 2 people exactly what they produce, who they sold it to, that they follow the sustainability rules. It goes into a local co-op that's somewhat regulated here. I can track the full sustainability, but when the money from this pond, which a PRA is, essentially, and it's regulated, and it's investment that goes back to that farmer because it's a receivable. I can track every piece of that loan. Measure that 1 2-person farmer and the 20 mangoes or the 20 bags of acai that they sold, they got paid for in fair price. So that's what we're looking for. But I know at the highest level of capital markets. So if I'm bringing in retail money or 100 million from an international capital markets player who's looking to access these markets, every piece of that is tracked and controlled.
Thanks so much, Bruce. And I see that our colleagues from Young Bank, right? And maybe it's time, for Aaron to make a presentation on the role of innovation. So maybe it would be great if we could argue also on the role of blockchain. And what do you see in your work as the implication for blockchain, because we've seen different angles of that, and maybe tell a bit more about your applied work that you're doing in Uganda, right?
Yes, first I'd like to share my favorite Brazilian financial innovation that's been pioneering in addition to fixing the CRA. Mine is actually Tesouro Direto, which is Brazil's retail sovereign financing program that's been around for more than 20 years and has provided a way for average citizens to purchase retail treasury bills for a very efficient program.
And a lot of the work that we do at Financial Finance looks at public finance and sovereign debt in particular. And here I see a massive opportunity of combining digital bonds with retail sovereign instruments. So these are instruments that the government issues, treasury bills and bonds, that are small denomination, that are accessible ideally via digital rails to the average citizen. And there are plenty of good examples of this already happening, but I feel like they're not getting enough attention in news cycles and in many of the high-level policy conversations that are happening. Sort of a silent revolution, if you will, very much spurred on by digital innovation and new infrastructure, digital public infrastructure in particular. In addition, in a lot of East African countries. In fact, that's where a lot of this innovation really started. In the prior life, I worked a lot on digital financial inclusion, including on a program called Emakiba in Kenya, which was the first of its kind mobile money bond, treasury bill. It enabled people to purchase a treasury bill through their phones with SMS using M-Pesa, which is the digital currency in Kenya. And what is so pathbreaking for me in that regard is that this is really a financial inclusion today. And the governments, of course, they have many different objectives. They need to fund themselves, but also they have many of them have an objective or mandate around financial inclusion, right? And oftentimes, savings products like this can be a very powerful on-ramp into the financial system for people who are marginalized in the financial system, people who are underbanked or unbanked, as are so many people around the world today. What it actually offers you is a way of earning the risk-free rate. So the treasury rate in the country is the safest investment that we can make in this country. Oftentimes, people put their money in a bank, and in many countries, including the one where I'm from Peru, you have to pay for the privilege, right? You can't just put your money in the bank and expect to get a savings, a return on that investment in your savings. You have to pay for that privilege. So with a retail sovereign instrument, you get the risk-free rate, the safest investment, and you have a way of sort of building up your capital base. And the banks don't love it, which is also one of the reasons why MFT didn't survive. It is now being sort of reinvented, and we hopefully make its debut again this year or next. But it's really a financial inclusion instrument, but it also has other benefits. It's a way of improving capital market development, and I think this is where the digital piece really comes in quite strongly. And what it allows countries to do potentially is to leapfrog a lot of that capital markets development process that is so difficult that the IFC and the World Bank and the NDB are working on, having to build up centralized clearing houses depositories for securities and being the name all jumbled up, but sort of the basic infrastructure and plumbing of bond markets require institutions that take a long time to develop. But with digital bonds, you can have everything in a box. Bond and box. Clearing and settling can be done very efficiently. And so even though that this doesn't negate the hard work that countries have to do in setting up CSDs and other types of market infrastructure, there might be an opportunity here to leapfrog to issue a digital sovereign retail bond on the blockchain. The other dimension I want to bring into this, because there are a lot of conversations around here, have to do with the emerging market debt crisis, sovereign risk issues, and really something that is sort of lost in a lot of these conversations is that in times of crisis, including war, what we see is that governments fund themselves largely from their own citizens. And not just in times of war, during the global financial crisis. So the poster child of this story is Hungary. Hungary lost access to the global capital markets and had to fund itself. That's what they do. They started what is one of the most pioneering retail sovereign bond programs, and now 30% of their financing comes from their citizens. And a extremely efficient machine that I think can be much more efficient through innovation such as bonds and blockchain. And then lastly, the point that I want to make is the opportunities that I think is really nicely laid out in the report that Erickson shared, and of course you're working on as well, is how can we bring sustainability dimensions into this? We've already mentioned the opportunities from digital MRV, reporting, measurement, reporting, and verification. We also work a lot on sustainability linked bonds. So these are KPIs, where again, integrity of the information that is being tracked is critical, and blockchain gives you that transparency and accountability to the infrastructure directly. Because what I would love to see is actually a digital
retail sovereign instruments that incorporates KPIs or user present provisions that can help us to harness all the benefits that I just laid out. And make this really an agenda for the G20 table, right? This is one way that we can help to address the global financing gap that we're seeing for national economy. It actually developing the domestic capital markets and creating savings for local populations to have a stake in the financing of the governments. And that will also potentially have even more quantity. And not just attract barrier to less CO2 in the country, and that will put some chemicals mechanism as well. So it's look, I'm
I just want to jump in quickly. I'm a Canadian, so I can tell you about these things. But there's something you said that you just responded to, ultimately we're trying to build here in Brazil. When you talk about focusing on inclusive economies, and you came up with the term, put it in the box. What Brazil offers is a fabulous profit sort of a lot of talk about deploying it here and why here. We have resilience and what's it say across the we get it right here. We get these instruments right here. We get these processes right here. We get the platforms right here. We're going to be considering right here. We can do it all in a highly regulated market, sophisticated market, and so in the single biggest market, all of the impact areas we want to have. And we put each of these in a box. We can go into these other markets and be fully inclusive. We can't set up a capital markets box in the Congo region that there is no capital markets. If you create a product and you put them in a box, like the CROs, like these stones, like what we're talking about, then we can go to those markets and improve it in this one. It has similarities, but have all the same impact goals. Then you can deliver there. I can do here, and I can go with you into Peru, which has some other challenges right now, because politically, so it's in it's done. The international capital players will work that because it's regulated instrument that they now know, they understand, and they can follow. So the inclusivity is there because you put it in the box and you proved it in the regulated market, that's highly sophisticated, and what every level of impact can be achieved here, whether or not all those are available. I think connecting these two, that has to start here in Canada, and we can build a digital world to do that together.
Great quote. Thanks for this discussion that you guys are signing up here. Sean, do you have any more reflections on what the gentleman said? And or say, there's a country like Uganda that wants to leapfrog, wants to benefit from innovation. What advice would you give to such a country, and what support you as an organization can provide if they want to invade in the green lawn space?
I was speaking to some of the Ministry of Finance yesterday about this, and clearly aligned with international guidance, how to practically work. Clearly, some domestic re-issuance to the others makes a big difference. But above all, it's an aging policy. Funds are just an instrument. Whether Ugandan sovereign debt's a good idea or not is a problem for the Ugandan Ministry of Finance. There's always debt problems in all countries, and so one of the benefits of green bonds is the see-through to productive assets, because they tend to be related to specific things. And as Zambia got into a lot of problems under the previous presidency, because they borrowed enormously to pay public service salaries, to meet budget shortfalls, which is what the US is starting to do with the trade protection. That is not viable, and then it's going to lead to problems. Green bonds try to work against that, because investors require you to be putting them into something useful and practical. So, there are things like that that are useful. But really what we're talking about is how we attract capital in the broader sense of the world. Uganda has domestic capital resources, but not enough for the job ahead of it. It needs input from international as well. And so the question is, how do we move to making the capital flow and then keeping the cost low? The cost reduction, the reduction of things like Eric's proposal are useful but small. The tapping of domestic investment, as Aaron said, that's interesting because you've got to make that extremely financially efficient, like this, which costs nothing, for people to be able to participate. Otherwise, the money, some just go that up. But that's a useful thing to do, to tap domestic capital, and potentially to tap international capital with the right kind of regulatory agreements in other countries. So that could be a fresh way of doing it. You know, I always remember in Nairobi when I was in Coco a few years ago. There was an ex-Bank of America banker who had decided to change his life and build a solar business in Kenya. He was doing a great job selling home solar kits to families around Kenya at a very cheap price. He raised money not in the public markets, but in the private notes market of Zurich and Munich. And he would do a visit once a year, meet investors and place the money. And that's something Uganda can do, because the ticket size in Uganda is smaller. Not going to do public bond stuff, but there's a lot of it. In fact, one of the most amazing conversations I've had a series was with the lead of wealth management heads of HSBC, Standard Chartered, and other banks of UBS, who all said that their high net worth individuals are desperate for investments or getting a return, but also make a difference to the ground. And they want more product. There's a relationship that the Ugandan government have with those banks, the wealth management positions, to make available stuff, which of course will have greater integrity if it links to Garrett's proposals and the other kind of reporting part of it. And investor in Munich still worries about integrity. It's smaller ticket size. My key point is across all asset classes, there are opportunities. Equity, small scale notes, domestic retail, as well as public markets. All of it requires clarity about what qualifies and protects how they work against global definitions, because all investors want to know it compares to something else and trade if necessary. And the plumbing. Everything's the plumbing.
Amazing. I'm learning a lot today. This panel. Yeah, thanks to you, gentlemen. So maybe we can go back to Garrett, because he's been doing a presentation of a report just at the start of this meeting. Maybe Garrett can provide us with some of his thoughts or argue with what we've been discussing here. So back to you, Garrett. Sorry, Garrett, can't hear you. Give us some.
No, sorry. I was just saying I was listening on the other channel, but the sound quality is quite challenging. Could you just repeat, please, Alex?
I mean, I think we had a great discussion here. So
Yes.
different views, different thoughts, angles. I learned a lot. So do you have anything to reflect on the quotes that have been given by our esteemed panelists today? Do you agree, or maybe like what are your thoughts?
Yeah, so actually from most of the panel, I had a hard time following, but I think like when Sean started off and said, okay, the cost factor and the efficiencies are actually like not the biggest challenge to solve. I mean, yes, so can imagine that like each individual factor is of course like of different value to different stakeholders. And I think that is also like we're in this early stage of this, especially digital bonds. There is still a lot of like clarification needed and needs confirmation. But I think that's also where exactly like I would say the underlying assumptions, some of which we hear at least also regularly confirmed from like the long tail of impact project owners that have like a problem of accessing capital markets. And of course, here's then maybe also the question, does every digital bond, for example, need to be a listed bond, especially when it then comes to the to the question of like the smaller issuers. So private placements can be also still like one aspect to look at in this context. But the rest of the conversation was actually quite a bit hard to follow, although it's the little bits that I got sounded interesting, but it was like hard to put like really a red thread to it. So sorry about that.
Great, thanks, Garrett. I see we have a lot of people in the audience today. Thanks, everyone, for coming. So I'm happy to open the panel for questions. And we have great experts here. You know, we have Sean, who's largely created the whole green bond industry. I would say we have investors, we have innovation experts who are defining new types of green bonds and working in Africa. So, guys, you're welcome to ask your questions or any reflections that you want to share. Please start with introducing.
Hi, thank you. My name is Paulina, and I'm a co-founder of Upward Finance. We provide loans to new technology SMEs in East Africa that can access loans because they're too small and they have collateral. And my question is about the size that an organization needs to be before it's profitable and financially viable to issue climate bonds. I'm curious to hear your thoughts on that. Thank you.
Well, there's no strict rule. It depends on what market you're issuing into and the instrument you're using. I mean, if you're going to be issuing a public bond in the European and US markets, yeah, $120 million is the smallest you can get away with for a public bond. If you're going to issue a private bond, well, you bilateral loan, effectively, to a public, then you can go as low as 30 or 40 million in those markets. If you're issuing a muni bond in the US, a peculiar market with tax credits sometimes involved, you can go as low as $2 million. So it's very much better. In India, a major public bond is $30 million. Now, so that's the bond side of it. But of course, there's many other things you can do. The commercial notes I mentioned, which is essentially someone from Kenya traveling to Munich and Zurich and saying, can I get a loan? And here's a structured bit of paperwork, which is standardized. That they can be 5 million, 12 million US in size. You're not going to do much for $500,000 of those markets. But of course, in individual markets locally, it can be very different. If you've got low friction, cheap ways of doing retail bonds, you might be able to do $250,000 or $500,000 at a time. So it just very much depends on the market and the market infrastructure to manage it. And we can do more, a bit like the retail bonds in Brazil that Aaron spoke about, where the local regulators and market authorities, such as exchanges, have come up with approaches that can be very cost efficient. We could be setting up what exists in some parts of the US, which is small boards for small business, which are basic platforms where you can place small bonds and raise money in a public kind of open fashion. These are innovations to come in Africa. We're not there yet as a rule, but it is something that every regulator, every ministry of finance ought to be looking at, especially the large markets like Kenya or Ethiopia or Nigeria or Iraq.
I think to add on that, size is not necessarily the issue. It's who the beneficiaries are and what's backing them. So again, the CRAs, the CRIs are making it. So IFC, we did a small CRA issuance with very small landholders selling into a cosmetics group. The first issuance is $1.5 million. So you wrap those all into this bond-like structure. It didn't matter about each individual loan. It's a large cooperative involved, and you had a whole bunch of small. They got wrapped into one thing, and you securitize that receivable. The bond piece comes in, and then you play it up. That's not going to move. That's the next step is a 10 million issuance. Just building on it, but the same structure in the same way. It's like a bond, and it's securitized, and it has an optic. It has somebody buying those products, and that's where your biggest risk is, not the producer. So if you're looking at solar, there's a group you're looking at the same thing. Very small DG solar across the Amazon that's going to feed in the local communities. The owner or the developer, whoever's going to manage that asset of solar, has people buying the energy. And so they have agreements to buy that energy at a fixed price. You can track that. You wrap those into these securities. You do one, that's not enough. You can do 20 of those across the Amazon, which is what they're doing. That's a $50 million wrapped in bond. And they move forward. And then again, since you know they're buying the energy, if they don't buy the energy, the business doesn't work. So there's other ways to structure, but in different communities, you can do different ways. Size isn't the issue. It's what's the product. Can you wrap it together so everybody's responsible? and somebody at the other end sort of buying that product or buying the energy or getting payment. So I think there's a lot of financial engineering can come into play, but there are products that exist that you can mimic in other markets.
And I think we're going to talk about credit rating, of course. There's another anecdote. In Kenya, there's a company that's doing securitization of solar loans where the payments are coming through M-Pesa, and which is a mobile phone company. And because M-Pesa has got a long credit history with the people who are the FICO score, with the people who are customers, they can get a credit history for everyone who's buying, especially microfinance or solar. They can wrap that up, and they've been selling those bonds in the US market because they've got a solid data set. So there's lots of ways you can tackle credit, but credit is important.
So in Africa, there's a company called ACE, Africa Clean Energy, they do cook stoves. It's digitally enabled. They are now selling carbon credits from all of the cook stoves that they have, and they're Article 6 carbon credits. So a single family with one cook stove generates 3, 4, 5 credits a year, maybe. Those are securitized and being paid for. And so that is to the smallest degree possible, and it's still being wrapped in, and it's still creating Article 6 compliant credits, and there's an off-taker. So the owners of those, the poorest of the poor in these parts of Africa, are not only generating carbon, they're generating money. They're paying off their stoves in 1 year instead of 3, and the rest of the money is in their pocket. And then and it's all digital. It's all going through the employees as the other, those tracked, and as they start making money instead of paying, it sits in their account. Now they have savings. Now they can access other products. And so this whole inclusion piece is starting at the very bottom part. So these, so look at ACE. They're in parts of Africa like that. That business was really smart. And this is a very fast carbon credit. So nobody's done that before. So the pieces are out there. Size is not the issue.
Amazing. I know there's another question from Francis here.
Thank you. Very interesting discussion here. My name is Francis Wesley, Chief Economist with Uganda Development Bank. It's a real interesting discussion, but where I would like to speak to is aligning the ambition by using small digital bonds, the mobile money support. Vis-a-vis the need to raise professional, very concessional financing and patient, especially for government banks like UDB. Because what we find that most of these would be the benchmark is the risk-free rate, which now for again is about 17.5 per 15 years bond. And I don't know how the tenors look like. So if we go the switching again aligns to another discussion on domestic resource mobilization, which will addresses the issues of forex risk and related risks. But then where we really find the challenge, especially us, is how do you align this? How do you raise patient? How do you raise concessional for financing for the key projects? Thank you.
Thank you. So I think there's an interesting opportunity as a development bank to access concessional finance, essentially these types of instruments, whether it be on the blockchain, the digital bond, or otherwise. And a good example is from a neighboring country, Rwanda, where the Development Bank of Rwanda a couple of years ago issued a sustainability bond that had a collateral mechanism built in from the World Bank. So the World Bank lent money to the Rwanda Development Bank, which then used that to collateralize a local currency sustainability linked bond. And what was interesting about that bond was actually the biggest buyers, the biggest purchasing base came from retail investors. The smallest denomination, I think, was around $70 equivalent for that instrument. So you had local buying of this retail instrument with KPIs attached to them. These were around for the SME finance, they were around gender equality, they had 3 different types of KPIs against this bond. But of course, it was de-risked through this collateralization guarantee. And the MDBs and DFIs are looking at other ways of putting in these types of credit enhancement mechanisms to address the concern that you said. And I'm also aware that Uganda is in fact also looking at a retail sovereign financing solution via the central bank. And in this case, it would be a unit trust model. And here, essentially, you buy in and out of what's like a money market fund, where the money market is just investing in Ugandan treasuries. So people can buy and sell these units whenever they want,
And so we don't have this problem of maturity mismatch, because the individual might not be aware that they're investing in an instrument that will only pay back in 30 days or a year's time. And so there's a liquidity issue. And when we did a pilot in Kenya with Cuba, this was one of the major pain points that came out of user research, is that people just weren't aware of the fact that they have to lock up their money for this amount of time, and what they really wanted was liquidity. And so I think that the development bank in Uganda has many models that it can look at and replicate and follow, and perhaps even make this a digital bond, the first of its kind. There are other digital bonds already out there. You mentioned a few. I think they live in Switzerland. The cities of Zurich and Lugano have issued digital bonds on the local SDF chain. But I think East Africa is such a fertile ground for innovation and financial inclusion in other areas, and I think that's particularly worth it.
Any other questions from the audience? We can take one more. Anyone? All right, and I think we're already running a bit late. I really want to thank our wonderful speakers and the audience. It was very well attended panel. Yes, I really learned a lot, although I'm in this space for quite a while. And I think maybe we all agreed that inclusion, impact, and retail would be the main key outcomes of this panel. And of course, efficiency and transparency, these things we keep on talking. But it was really surprising for me to learn today that these three things that I mentioned first are the most important and are definitely the trends. And I hope that you gentlemen can come to Uganda and help them innovate and leapfrog and show the example. And next year at TOP, we're going to be showcasing Uganda has already made a legal foundation of this TOP. And the next step would be a digital retail carbon-linked bond to finance small-scale projects in Uganda. That would be amazing. That would be a great result of this panel. Thanks a lot. Start.